Hi everyone, let's go through my preferred bullish and bearish medium time frame 2 micro Elliott Wave scenarios on Bitcoin, including potential trading setups, starting with this final impulse to the upside and why I think wave 5 is already in and we are looking for a corrective structure to the downside right now. Now this final impulse looks to be an extended wave 1 impulse, which means that this leg over here is the longest wave in this 5-wave structure, where usually wave 3 is the longest, now wave 1 is the longest. That also means that the targets for wave 2, 3, 4 and 5 change accordingly. In this scenario, the most common target for wave 2 is now the 236 to the 382 over here. For wave 4, the most common target is also the 236 and the 382. Wave 3 does not have a target if wave 1 is extended, and the wave 5 most common target is between the 0.618 and the 0.786, which is pulled from the low of this wave 1 to the high of 1 to the low of wave 2 with the trend-based fib extension tool. Now, as you can see, after we hit and basically wicked inside this target area for wave 5, price has been raging for quite a long time now, which makes it even more unlikely wave 5 is still to come, and in my opinion it makes it more likely that this wave 5 is already finished. In this scenario, we had the potential short setup where shorts were laddered in this area, stop loss above, trading it to the downside for eventually a correction. However, by now, also looking at the lower time frame scenarios that I'll show you in a second, stop loss should at least by now be at break even, maybe a small little profit taken, because I'm not so sure if price is already going to the downside, and I would actually prefer price to move to the upside once more, take a bit of liquidity, also reach a couple of confluence areas around the 30k level, including the psychological level, of course, and then move to the downside. So let's then look at the corrective structure that I'm currently looking at. Now, for this correction, it doesn't really matter if we're thinking bullish or bearish. I mean, it's still a corrective structure. Either this move over here is a 1, 2, 1, 2, and then you have a big 3 to the upside, or this is the end of a big 5-wave impulse, and this structure over here could only be the first structure of eventually a bigger move to the downside. Now what you see over here, the pink lines on the chart, that's called a bars pattern, and it's basically a copy of price action from 2021 that I basically pasted on top of the chart that we have right now. And as you can see, what I've done is that this looks to be a 3-wave structure like we have on price at the moment as well. We have like a 3-wave move at the moment. So in this particular scenario, what I'm looking for to basically kick things off is to create a fake high. So not this being a wave 5. Wave 5 is still over here, but some people might then deem this a wave 5. But in this scenario, this is a 3-wave structure, followed then by another 3-wave structure, and then an impulse to the downside, which creates an ABC expanding flat in the first part of this correction. Now over here, the most common target area for wave B in an expanded flat is between the 138 and the 1.236, which is between 29.6k and basically 30k. Also a nice confluence with the weekly naked point of control and the weekly at around 30k. So that would be very, very nice. The potential trading setup is to enter these shorts in this area, stop loss above the 1.618, as that is a rare target for the wave B expanded flat, and then trading it to the downside, where the length of this potential short scenario, because of course, guys, this is educational based on Elliott Waves. You know, I try to show you how you can potentially trade Elliott Waves, because many people think Elliott Waves is very subjective, but actually it's not. Like if you're good with the theory, you can definitely find many setups. So for this potential short scenario, it's like, you know, it's two faces, two sides of the same coin. Like basically you look for this wave 2, this being a 1, 2, and then a move to the upside, which means that the most common target of a wave 2 is between the 0.5 and the 786 over here, which is between 23.9k and 21.3k basically. So that's going to be your target. At least for take profit 1, you know, if not a full closure. But then if this is the end of a wave 5 and we're going to go deeper to maybe even taking the lows over here, you can see that the trade will just extend. So based on the price action and the correction we're going to get, if we are, of course, but that's at the moment what I believe is most likely, is that a correction is to come. Depending on what we get, we can then determine how long this position can be open or closed, of course. But at the moment, this is what I'm looking for. And well, the first structure would be an expanded flat ABC, which becomes more clear if I actually go to the low time frame bullish scenario. It is bullish because we expect upside, right? It's still an expanding flat with eventually downside, but out of the two scenarios, I first expect it to go to the upside. So what we're looking for over here, On the lower time frames is then the end of wave 5, the wick over there, followed by a 3-wave structure in a blue A. So this is a WXY bouncing perfectly on the target area for wave Y with the potential long setup that we had in this target area. Stop loss was below here, trading it up for B, which by now stop loss break even, maybe a take profit 1 taken, but still the target being B. So whatever happens, it's either break even or a winner. And if we then look at the second structure, because we're now looking for a wave B up, which means it's a 3-3-5 wave move. So we need to find 3 waves in this wave B. Well, the first part of this wave B can then be a WXY in a bigger W, followed by an X. Either X is over here below this wick or maybe over here. We have been ranging for a long time by now, so I'll go into that in the micro scenarios. But we are still expecting, based on this scenario at least, a move to the upside. And I think it's important to know as well, we have a double top over here, we have a triple top over here, which eventually is very price attractive. Like it's like a magnet for price, right? Like liquidity up here, and yes, price can move to the downside, right? I mean, there's nothing holding it back. We have our scenarios, we are prepared. Also, wave Y over here missed hitting the target box, which usually is not something I like. I would like it, or I would have liked it, if it hit the target box and then moved to the upside. So of course, price can still go down, hit the target box, and then we also have a scenario for this, which I'll show you in a second, to then go up for maybe the 30K area. But in this scenario, we expect it to go up already towards the 30K wave B area, where you can also see we have a bit of a resistance area over here with the confluences. Wave Y, however, at the moment, the target as it stands now is below wave B. Of course, price can wick in the wave B area and then eventually close or range in the Y area before down. But of course, confluence wise, I would prefer it to be exactly at like, or at least overlapping, which at the moment is not the case. So that is also something to note. Of course, again, the potential short scenario is the same as on the medium time frame to ladder over here, stop loss above the 1.618, short to the downside. But the liquidity over here, like, even if we go down and take the low of this wave Y, hit the target box, and then maybe go up, like, we still have liquidity here, which I still think is very attractive. So we can also expect something like this to happen, for example, which is also partly a little bit like the bearish scenario that is going on, or that I have in front of me. So what you're looking at right now is the more bearish scenario, where I have a WXYXZ. So instead of going to the upside where we are now, we are expecting downside. Now, before we zoom into what is happening over here, if we look at the WXYXZ, wave Y hit the 1-to-1, which is perfect. That's the target you wanted to hit. And then eventually we have wave X and then wave Z. So in this scenario, what I do like is that we are gonna hit the target box over here before moving up to the 30K area. So we're taking away the support over here because we are hitting daily naked point of control, the range point of control, a daily. So we are basically going to hit the confluences in this area, which makes the support weaker for if we go up and then come down, we can go straight through the support, right? So because it's already been tested once. So in this scenario, the most common target area for wave Z is the white box that you see over here between basically 27.3K and 26.9K, and also the lower time frame, the 1 and the 1.236 over here is also inside. Like, this is nice confluence, right? Two like targets, the targets for the yellow wave Y in a WXY is in this area, as well as the bigger target area for wave Z. So it's like the most common target for Y matching with the most common target for wave Z. It's a nice bunch of confluence around this area, besides again the target box that we have here as well, making it like an attractive area for then this potential long setup, right? Laddering in this area over here, stop loss below these lows and then trading it to the upside, because I do think below these lows there's not much support over here. This wick already took the liquidity of this low and this low. There's just not much support all the way down to 24,850 anymore. So I think if we would go below over here and it's not a swing failure pattern, yeah, definitely downside is most likely in that scenario. And if we then zoom in, I've seen many triangles. I disagree with most based on the Elliott Wave rules. Many just online, they don't fit the rules, right? And it's annoying. So in this particular scenario, what we have is we have the blue count, right? And then we have the yellow count, and the yellow count is the lower time frame count. So in this scenario, we then have this as a first part, second part, third part in a W. A triangle can only exist, might be one for your notes, a triangle can only exist in a wave, there we go, in a wave 4, X, B, Y, or Z. These are the only ways that a triangle can be positioned. So in this particular scenario, we have this as then a W. So W is over here and not here. And the reason why has to do with the fact of a running triangle versus a contracting triangle. So if I would put wave B over here, and this is the beginning of the triangle, then you can see if this is A and this is B, then wave B went below the origin of wave A. Now that is not a problem by itself, but it's about probabilities. And a running triangle, because wave B going below the origin of wave A, a running triangle is very rare. So actually, let me remove this to make things clear, because there's a lot of problems with triangles in general, I believe, online, and how to understand the triangle. So if this is the triangle that we're looking for, oh man, I need the, where is it? A to E. So if this is A, B, C, D, and this is E, right? What we are creating now is a running triangle because B is below the origin of wave A. The most common target, fib-wise, for a running triangle is this one over here, which I of course have as a scenario in my list. So over here, wave B running triangle in a zigzag or WXY, that doesn't matter. The target is the same. So if it is a running triangle, most common target, or actually the only target, is between the 0.1 and the 0.4 fib. So the retracement of the triangle ends in between this area. But as you can see, this first wave already went significantly above the 0.4, making this scenario very unlikely for me, first of all. Second of all, a running triangle is very, very rare. It's a very rare pattern and definitely not one to look for at the very beginning. So then I was like, okay, if we just change the, or at least I already had this scenario, but if we then change it up a little bit, right? Make this wave W. So in the bullish count, this is the low of wave X, right? And then you have, in a W, you have a 3, 3, and then another 3 over here, right? So we have 3 waves in this yellow W. In this particular scenario, we have wave A, perfectly fine, wave B ending at the most common, or well, between the 618 and the 0.786, which is the most common target area for a triangle wave B. Then we have C, which is not like invalidating the triangle. However, it got very, very close, because as you can see, wave C went almost all the way to the high of this wave A over here. That would be the ultimate invalidation. Usually a wave C most common target is between the 0.618 and the 786. So if I put these on, you can see actually wave C is very, very high, right? Very high for this to be a triangle. Wave C over here, very high, even going above and closing above the 886, which is not really something I like. Gotta be honest, it's not something I enjoy seeing in a triangle. But in this particular scenario, the official invalidation of a triangle is taking the high of A. So in this scenario, we just say, hey, even though it closed above the 886, we just accept the fact that this is a wave C. Looking down, 3 waves for then this wave D, which ended in the most common area for then a wave D. And then wave E also closing at the, or at least hitting one of the most common areas for a wave E, which is the 786. So that is all very nice. That now means this is an A, B, C, D, E. This is then the end of wave X. So we have a triangle completed and then a W, X, and we are now on our way to the downside for wave Y, which then needs to be a 3-wave structure. And based on what we see at the moment, that might be a impulsive structure, right? And of course it's not going to be 5 waves straight down, because also wave Y needs to be a 3-wave structure. So if this is a W and this is an X, we're looking for eventually a 3-wave down to Y. If it just goes in a straight line, this setup over here is invalidated. This is not a potential long anymore, right? It all depends on how the waves are gonna form, and it has to be some sort of a 3-wave structure in wave Y and also wave Z, right? So if this is then eventually wave Z, we have this as a 3-wave in Z, which is fine, but then in wave Y, you want to see a 3-wave in Y as well. So that is then what we're looking for this potential triangle. Again, wave C, it's very high, so you can also count this differently as this then being, so let me actually put the bullish count, so another count that you can do, bearish is that if this is then a W, this is X, so X is already up here, and then you have Y to the downside. It is a bit messy now with the triangle, but this wave X, the yellow X, then moves over here, and the triangle should be not visible in your eyes. So if I do this, we then have a W, X, and we are already in Y. So this is an alternative because this potential wave C and then the triangle went so high, so close to the high over here that yeah, it's not something I really like. And also we still have a double top, we still have a triple top over here for liquidity. So even if we move down, I would like it to go up and take the liquidity or go up already, because also as long as the bullish divergences are not invalidated, we still have bullish divergences. So I'll show you the bullish divergences before going to the lower time frames. This is a longer video, but yeah, I hope you value the fact, you know, it's weekend. Hopefully you have a bit more time, but I hope you value the additional education and explanation of Elliott waves and patterns as well, because there's a lot of mishaps that I see online that just do not fit the theory. So if we then look at the the divergence we have on the CVD, as long as the bullish divergences are not invalidated, we still have bullish divergences, right? Of course, divergences can be leading, meaning even though the blue line, for example, over here is making lower lows and price is still having a higher low compared to this wick over here, which is a bullish divergence, doesn't mean it has to play out, because of course no indicator, no strategy, whatever is 100%. But as long as price is not taking this low over here, we still have bullish divergences on the chart. So you definitely want to see this low taken, and I think if this low is taken, we might go for the low next, right? So we have the more bearish scenario before then a continuation to the upside. But as it stands now, and we actually zoom in to what is happening more locally, we did have some bearish divergences. Quite unfortunate. These appeared right after my video in this morning at 7:15 a.m. my time, Central East European time. You can see that on the yellow chart made a lower high over here, so a lower high on the chart. But as you can see, the yellow line made a higher high, and that literally happened after I recorded and then uploaded the video at like 7. The time here says 6, but I'm an hour in front of this chart. So at 7, the moment it launched, and then 7:15, the divergences started to appear. So yeah, I couldn't take this into the video. But yeah, we have bearish divergences resulting to a move to the downside. It already played out. So yeah, these divergences on the lower time frame already played out, so these are now insignificant, of course. But if this is a potential triangle wave E, so if this is the triangle wave E over here, then that is what you would like to see, right? At least some bearish divergences either between C and E, or if this is a 1, 2 and then 3, 4, 5, right? For more downside, it's nice to see bearish divergences for then a continuation to the downside. That's actually exactly what I would like to see as well. So in this particular scenario, the bearish divergences happens to be very nice in the bearish scenario, that is. And then we still, as mentioned, have the more bullish scenarios. There's no bearish CVD divergences between the tops, but we still have higher lows, higher low, and we still got divergences going on. But yeah, if those lows are taken, those divergences are invalidated. So if we then look at the micro bullish scenario, which starts to, I don't like we hit this again, right? Like it's a 4th time we're hitting this target box. The more often you're hitting it, the less reliable it becomes. We still have this rounded bottom over here for potentially a move to the upside, but of course we have been ranging very horizontally for a long time now. So the short scenario that we had, or at least if this is the low of wave Y, we had a W up in a WXY hitting the target very nicely. Short setup over here with the bearish CVD divergences, very nice. Main target was this target box over here, so close profit, all nice, all good in this educational potential trading setup. And then the potential long setup for this being a wave X, because with a wave X you do not expect the low to be taken in a WXY to then the upside, was to enter the longs in this area over here. Stop loss below the low for then a trade to the upside. And then eventually as price, then we have to wait what price is going to do and what it's going to show us. And eventually after coming down once more and then up, this was the moment that I made videos as well and said, okay, it's now a good time to at least in this potential trading setup, if one trades Elliott Waves or could trade Elliott Waves, then instead of having the stop loss over here with, for example, a 1% risk, no financial advice, guys, this is literally educational on how you can trade potentially Elliott Wave scenarios and stuff, right? It's not as subjective as people think. So then from here, move it to this low over here, to the low of wave X, which means if one trades with a 1% risk, it was now a 0.2 or 0.1% risk. Then we move up, we move down, and then up again. And this is where I also said, I believe this morning or even yesterday, where I said, okay, move the stop loss up again now below this low over here, because if this one is taken, it's very likely this one is taken. And at the moment, we do have a wick over here, but it didn't take this low. So yeah, this is just how it goes, you know, based on this scenario. We are looking for upside for wave Y, but it becomes less likely the more we are going to stick around this area over here. But then again, we do have a double top and a triple top, but those can also be reached later in time, right? If we then go to the bearish scenario in this, on the Elliott Wave chart, or the Bitcoin chart, the bearish micro Elliott Wave scenario on the Bitcoin chart, we have this then as an A, looking for a WXY in wave B, and then let's see to the upside. So in this scenario, as you can see, yes, wave X can be the triangle, but it can also be a 3-wave over here, right? 1, 2, and then 3 in W, 1, 2, 3 in X, and now we're already on our way to the downside for wave Y. The invalidation for the triangle would be to take the high of this high over here at 28,111. That's the invalidation for the triangle. That's why I put this line over here. But in this particular scenario, we are looking for downside where the target box is going to be the main target, lettering the potential longs in this area, stop loss below these lows, and then trading it to the upside for the 30K area, which I think is still quite likely to be reached. Also, if we look at the medium time frame counts, which I showed at the start, it's just we've been ranging over here for so long after most likely this wave 5, at least the highest probability, this wave 5 being in. It's not an impulse to the downside. It's not a very impulsive move like a 1, 2, 3, 4, 5, right? Which therefore makes it more likely what we have over here is a complex structure, a WXY or a WXYXZ, which means that if this is a complex structure, it's very likely the beginning, only the first part of a bigger structure, which means that if this is a complex structure at the beginning, we will then have a move to the upside before a bigger move to the downside again. So yeah, definitely a longer video on Easter. I hope you guys have a great Easter weekend, eat a lot of chocolate and all that good stuff. And I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.